This I'm going to talk about commodity in general. I have another section tomorrow. I'm talk more about the silver and solar panel. Okay, more specific. So the key is a disclaimer. As I said, the important, very important is where we are, so you can decide what to invest. So to increase your portfolio and family wealth. And this is what I said about 2 months ago, right? At PDAC, my conclusion was 2023, I feel like 2008 again. And then what happened exactly a few weeks later, was just almost 1 week after my talk was Silicon Valley Bank. And then there's continuous bank failure. And you look at the loan. That's the bank loans. Okay, so they continue to drop, as Eric was saying, and even now, okay, the money continue to flow to the money market. So we could see more bank failure in the coming months. And you see the small. Let me push out over here. So you look at this. This is a loan for the real estate for small. So we have a lot of issues, and I just quickly go through what I had. That was my slide 2 months ago, right? And that was what happened. So basically, my base thesis is that we are likely heading towards a recession. And then for question for you, for me as well, is where to invest if we're heading recession. We could be this quarter unlikely, maybe next quarter. So it's only 30 days away. So what is the best investment is gold. Okay, coming out of that's both Gwen and Eric mentioned this morning. So this is a chart about, around recession, days around recession, and then what the investment return, okay? And then you look, the best return is gold. So you want to have a gold, and then you can have it run for certain period. And this is average all the way back to 50 years ago. In the past 50 years, what happened when you have a recession? The best performing commodity is always gold. And the trick is, I can tell you from my experience, is when do you going to take profit in gold and then buy some undervalued? That's another topic to talk. But we can say if we are heading to recession in the next 30 days, we are probably around here. So it will be a good time to accumulate gold and gold mining position. The second best is general commodity. Actually, we have quite a few companies right here, and it's different, including copper, including lithium, moly, and many other commodity. Commodity in general, that will do second best, okay, and oil, including oil. The third best is U.S. Treasury. But my question is, this time around, U.S. Treasury may not be a safe haven because of the debt situation. We are paying very high interest rate, inflation, and my thesis is inflation unlikely to come in very quickly or as quick as the Fed like. So, and then the worst performing, if we're heading to recession, is the S&P. Right now, stock is pretty high, so you should be careful about the stock market. So, the timer is not on. Can we turn on the timer so I know if I'm running out of time? So this, I'm just trying to say, I mean, we were talking about China, including both Gwen and Eric talk about China. If you invest in commodity, you need to look at China. China picture right now, it's a very shocking picture. So last year, the Chinese surplus doubled from the year before, okay? So let's take a look what happened this year. This year is going to double again. It's going to double again. So what's causing this? Okay, we have let's just go back to the picture. You can imagine it's candlestick going right to here this year. What happened is first, Chinese economy is weak, domestic economy is weak, so the import is weak. Okay, but in the meantime, Chinese export engine start to rolling forward, especially going to the higher end, like automobile, solar panel, electronic, so on and so forth. So this will have profound change in the world economy. You can see this picture from AP. That's the automobile. Automobile right now, China is #1 exporter in the world. They are selling electrical cars for about 10 to 12,000 US dollar, 10 to 5 new car. Okay, think about may not fit for us, may not fit for Canada, for US, but for the developing country, the country that actually benefit from the trade war, like Vietnam, like Mexico, may be perfectly okay. And then you got a new car for fraction of our cost. Another one is TV. For example, like those TV in China right now is $100. The TV will be the next microwave. If you remember, microwave used to be high end, and then going down to the $30 range. I see the TV will go down below sub $100 TV is coming, but of course may not come to United States. But for the rest of the world, developing world, is very attractive price. But my point I'm trying to make is that China is in a very interesting situation. On one end, there's deflation. Domestic economy is weak, and the housing market is going down, but the export is booming like crazy. What that means is, this lead to my thesis. Just go down a little bit. Okay, I'm trying to, the thesis I'm trying to say is here is we are in the second bull market for commodity. The first in the super cycle was early 2000, the China, modernization of China. So that led to the first commodity supermarket. And then now it seems to me we're in a second leg, that's the modernized world. All these electronics, all the cars, all the TVs, all the solar panel require all the material. All the material remains, right? So you sell the car much cheaper, people buy a lot more and need a lot more material. So, and also I want to mention right now, I mentioned that a little bit last presentation, and a lot of people asked me about that. So what it looks like now, that was a couple months ago, is even higher. The cash on the sideline is about $5.4 trillion in the United States. That's actually causing just money just flowing into this place, flowing to that place, coming to stock market, come and go, go to those very high liquidity stock, especially technology stock. So that's actually is dangerous, in my opinion. So that's the thesis. You want to take a look where we are. And if you remember, if you invest in all the commodity, you remember this Thursday, 3 weeks ago, suddenly Chinese PPI came out. It was much lower than expected, right? Investors will expect China coming out of COVID will be booming. Just like us, we have an inflation problem. Expect China to have an inflation problem, but it was just negative. It's deflation. If you remember on that day, it was Thursday, people start selling from Australia to Hong Kong to Singapore, all the way from London to United States commodity. That was a downturn recent commodity, including oil, including copper, including zinc. All the commodity got sold off in the past 3 weeks. So that was China PPI. It's much lower than expected. But I want you to take a look at the longer term chart. Look at this. Why China PPI is very important? Because it always leads to China's inventory by a few months, 2 to 3 months recently. So the PPI is drop, and it's very lowest can drop. It's about 5%. That's during COVID. So we are not far from that. Okay, we are -3. So if you look at them from cyclical point of view, we are pretty close to the bottom, pretty close. And now I just want this. This is a good chart I got from my friend in China. That's all the copper inventory. This is absolute number. You can see shockingly, the copper inventory right now is about 20% of it used to be just a few years ago. Okay, this including the copper in China in the tax-free zone, which where trader put their copper is. So this is a worldwide copper inventory. And imagine this is we are now heading to recession. The inventory is so low. What if we're coming out of recession when the copper demand pick up? So this is my conclusion on you guys think about. And unlike previous recession, people go rushing to U.S. government bond. This time the bond may not be the safe haven anymore. Okay, the commodity price are pretty high. If copper is $3.60 is pretty high historically compared we are heading to recession. Even going down a little bit, it's with inventory so low, when we're coming out of it, the copper can easily spike to much higher. And the war also keeping the commodity high. The inventory and Chinese PPI pointing to bottom potentially by the end of this year. You think about the timing-wise, the Fed could cut interest rate by the end of the year. At least people are expecting the interest rate cut. The Fed cut, commodity goes up, and then we bottom about 6 months from now. So think about that to how do you position, how do you want to own commodity and commodity price. So this is the super cycle. That's my thesis. You look at this. This is the super cycle of rebuilding or modernization of China. Look at the spike. Look at all the commodities. And then we are here. We're just starting coming out of a huge downdraft of commodity right here. And I expect we will have a very good decades ahead of us, modernizing the world. So this is I'm partnered with Jay Taylor. This is my website. Let's start with companies.